All right. Hi, people. I thought to take you over a week of trading using the Fabi strategy and explain you along the strategy while go over the chart. I think that's the most useful so you can see it already in practice and maybe learn a thing or two from it to use it yourself. It is a strategy that allows you the opportunity for one trade per day only on gold, usually around London Open, and that's it. It's a strategy that fits my personality well because you can't overtrade. You have also other time to test other strategies or do other things in your life while you consistently build on this strategy. It could be a monster when you execute it well. I'm a big fan of not needing too much TA or other crap and just stick to something and perfect it. So yeah, let's stop rambling and start with Monday, the 3rd of November. So what we see here is I drew some white boxes, an order block usually, and that's where we trade from. And we also have the AMA cross. It is at 7 and 21. That's also something I use just for confluence. But basically, we trade with the trend of, let's say, 6 hours previous, or you use order flow to kind of figure out where the trend is going. So, first off, the first white box says DTO, which means the daily true open, which is set at, I'm in Central Europe, so which is set at midnight Central European time. I usually draw this box. I draw it here on the 50-minute chart on the wick of the 12-hour candle. And why do I draw this? It's because the algorithms from the brokers usually go back to this box to fill more orders and then choose a direction. And you can use it as a strong confluence. So that's the first one, the daily true open. Then at 5, I have another box called MPQ2, which is a micro pivot from quarter 2 in the trading day. 5 o'clock is in quarter 2 of 5 o'clock Central European time is in quarter 2. So I also draw this one out for the same reason as the DTO. As you can see, it fills orders, choose a direction, and then usually goes. And then I use the 50-minute chart and the 30-minute chart mostly. So the 30-minute chart is like my to-go chart, and then to perfect it more, I go to the 15-minute chart, but usually we start from the 30-minute chart. I drew the two boxes, and then what we do in this strategy is look for a significant order block in the Asia session. And let's say I use Asia session from midnight Central European time until 6 o'clock. And at 7 o'clock, I usually open a trade. That's where I take a bet on where the market is going. It could be also later during the day when it's not very clear. There are some examples in the strategy, but usually 7 o'clock. So here the trade ID was, we drew the DTO. It came down, it went back up, filled some orders, came back down, then it all the way came back up. It mitigated the DTO block, so we lose that block. basically. And it also shows me that the market wants to go higher. Same, it leaves this order block where I drew my order block from to trade from, because yeah, it looks a bit like a dodgy candle. It chooses again a big impulse to the upside, comes back down, and then I drew the MPQ2. Again, it mitigated that block, so again, that's already a second confluence that we want to go up. And I also have a crossover here where you can see that the market also wants to go up. So that's three confluences. When I zoom out a bit, it also respects the lower highs and the higher highs. So I thought, okay, I take a bet on going higher. And indeed, it did. I actually FOMO'd in around. No, I did not. I'm sorry. So I put my my buy order on the order block. It filled. It made a impulse up. It almost took us out for TP, but it failed. The impulse. It took the liquidity here, came back down. It fucked around a bit, and then it took us out for a loss. It can happen. I take away from this trade that you can have a first impulse. Let's say here that it tapped you in here. First impulse comes down to entry, and when it fails the second impulse, you could put yourself to BE to save that loss. But usually I let the trade play out and not interfere. So I put my trade, I do something else, and I see what's going to happen. Then on Tuesday, other trades. We have the DTO at 12. You can see it comes down, it shows some strength. It fills more orders, pushes back down. So that's for me a sign that we want to go lower. It comes back up. Here we have I also drew the MPQ2. It mitigated that block. And I drew my order block from here in the Asia session at 4:30 because it gave a big push down, broke structure. Then it came back up. You could technically say it breaks structure here, but I already was in the trade here to go back down. So yeah, there's not much to do. At this point, you're praying that you won't be taken out for loss. And it chopped a bit around, and then it finally broke down in a very aggressive way in the New York session and took us out for a full TP. I usually, when I put my entry, I have at least a buffer of 0.25% to let the trade breathe. So here it's 0.34. It's on the top of the TTO box. For safety. Then when we go to Wednesday, we have I was actually really excited for this trade because also a lot of things. It's a nice trade. So I drew the DTO. Then we have a big impulse from this candle, this order block. So I put my entry a bit lower on the candle itself and not on the wick. I think when we go to the 15 minutes, on the 15-minute, I took the extreme of the order block. So the DTO and order block are like falling together, so it's a nice place to come back to. Then we have the MPQ2. It came down. It reacts like it does. It's a confluence, a reaction zone. It went back up, so we're like, okay, probably not going to be tagged in. When it crosses the 3R mark, that's my standard TP, risk to rewards, I cancel the trade. Or when we go further than 5, 6 o'clock, I also cancel the trade, um, and go on with my life. So it comes back, mitigates the block completely. So we are like, okay, it's still not crossed the 3 hour mark. We're almost tagged in, but it mitigates the block and it goes back up. And then the next day during London, it takes TP, but didn't tag us in. So that's that. Then we have one win and one loss and one PE so far. So we are at 2 for the week, which is 2%. It's great depending on your risk profile. Here again, we have the DTO at 12. It also aligns with the order block where a big impulse comes from. When we wake up here, we have the MPQ2. It again mitigates that block, reacts with that block, whoop, shoots up. It breaks structure. It also takes the 3 hours, so we cancel the trades. That's it for today. We move along. It would have tagged us in actually, and respected and respected the order block, and then would have taken TP here the next day. But yeah, it is what it is. It becomes too late. It often goes wrong more than it goes right, so I leave it for what it is. So another BE. And then on Friday, we have the DTO here. We have also a big MPQ2, so big reaction zones. When we go to the 30-minute charts, we could say that the order block at 12 or this, but it's from the previous day, so I don't really take it into account. So I look further, and then I could see that, here we have an impulse, and then here we have another impulse. So there is an order block here. So you put your entry here somewhere, you cover somewhere here for your stop loss, maybe to be safe on the swing low here, or a bit higher if you want to take that risk. So price comes back in New York, even with the MPQ2, takes some orders, shows strength, price pushes down more, it reacts slightly with the DTO, shows a lot of strength, and then in a very violent move, it takes us out for TP, which brings it to 5% for the week, which is that's it. Then we have Monday, so I actually fucked this straight up. So I'm at 2% for the week, but there was a 5% to be grabbed for the week, which is phenomenal. So that's it for this week's trading. I'll see you for another session review for soon. It's also my first video, so it's a bit awkward to talk to a camera even without showing my face. But I wanted to share this strategy because I just want to showcase that you don't need a lot. You also don't need a lot of trading, just one trade per day. No crazy RRs, even though 3R for some people is crazy. But it's very straightforward. It's very simple strategy to follow. You can give it your own discretion. And that's it. You can also have a full-time job or do other stuff. Trading doesn't need to be complicated. Everything or almost everything happens in the mind, and I also struggle with that a lot. To get your mind straight and just follow your plan. Don't overtrade. Don't do stupid stuff. and trust the process and learn, backtest it. So yeah, stop rambling once again, and I'll see you in the next video. Bye bye.